Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Vince Gaetano. Vince is a mortgage broker and vice president of monstermortgage.ca. Vince, let's talk about mortgage negotiation tactics for a period of rising interest rates. Let's say I'm going to be buying a house and I want to go get my mortgage pre-qualified and I'm going to get my lender to quote a rate. How long should my lender be willing to hold the rate for me?
Traditionally, lenders will hold a rate 120 days, which is 4 months prior to you needing the money. And that
can I ever get longer than that?
You can on exception basis. When you're buying new construction, a lot of builders have what they call cap rate mortgages. And what that means is the rate will not exceed a certain interest rate. Unfortunately, you're not always getting the best discounted rate in those situations because the cap rate is usually extended for periods of 12 months, 24 months in the condo market, so they're not as aggressively priced.
Okay, now I recall in the past that some lenders only offering 90-day rate holds, but you say 120 is what you should be looking for.
120 is the norm, and that goes for a purchase and a potential renewal as well.
Okay, so we should remember to reserve rates for our renewals as well. So
absolutely, that is key. It's like an insurance policy of making sure that you've secured a rate in case rates go up.
And no matter how much rates go up, they have to give me the rate that I've agreed upon.
That's correct, provided you close by that date.
So if you're looking ahead to rising rates, you've got to jump on this and get that rate locked in as soon as you can, as soon as you hit the 120 days ahead of your closing date or your renewal date.
You're absolutely right, Rob. And the key is understanding when your maturity date is. A lot of people put their mortgage documents away and go on with their life because it's 5 years down the road. It's very important to know what your maturity date is. Document.
Mark it on your calendar.
Mark it on your calendar. Diarize 120 days before and secure
Vince,
that rate.
Let's say that my mortgage comes up for renewal, and let's say less than a year, but we're talking like 8, 9, 10 months. But I'm worried rates are going to soar between now and then. What can my lender offer me so that I can get into a new mortgage now rather than waiting for rates to rise higher?
Well, most lenders are accommodating homeowners that are in that predicament. They're early renewing their clients.
So how does that work? How does an early renewal work?
Well, there is a penalty that is involved that could be blended into the rate or could be waived if you take a higher rate. It's always important to deal with a mortgage professional that could crunch the numbers for you, identify what the penalty is and how best to deal with it.
So, but there are things that can be done for me if I want to renew extra early in order to sort of circumvent a rate increase.
That is correct.
So ask your lender.
There's always options available. You can always break your contract. You need to know what the terms and conditions are.
Okay, thanks, Vince.
Thank you.